thrive, yeah. I think that we've already known it. I know that we're calling it pro.
Hey guys, Maximum Profits here. I'm going to be doing a video on UiPath, Simple Path. Basically, what Path does is it automates your workflows and your processes. Uh, it actually has market share of 54% with 6,400 companies. It is growing rapidly. Well, not really rapidly, but 24% year over year, and that's during some bad times. So you can tell its dollar-based net retention rate is 132%, which is higher 32%. People that use UiPath really do like it. It's just that people aren't willing uh, to upgrade their platforms and their services and to buy more subscription services, which is really shown in the growth. It's 82% gross margin is standard in a SaaS company. It's probably on the higher end, but they do lose money on a non-GAAP free cash flow basis, but they do have a lot of cash, so they won't their financial position is strong. So let's just go to UiPath. Their balance sheet, their net cash is 1.8 billion with them having basically no debt. 50 million worth of long-term debt. They're not going bankrupt or anything for a long time. So here I'll just give you with companies like UiPath, but I think that UiPath is actually a huge opportunity right now because let's just go to Path. Believe its valuations at a 5 times sales, 7 times sales, which is lofty, you can say, but looking at its growth rate, it's not really that lofty. And this one is 18 with its price right now at 12, but you can see the growth rate for here falls off really quickly. The overall AI market in general it's growing at a 20% rate, 38%, depends on what source you look at, because the classifications for what's considered AI is really different. So because this one thinks that the market is valued at 93 billion, this one thinks it's at 387 billion, but basically it's growing at, just the market itself is growing at 30-40%, and the only real competitor they really have is Microsoft, and Microsoft, they have to go through a bureaucracy to get any new innovation basically achieved, which is different for UiPath. So if we make this growth drop down slower, which I think that it could sustain this if its execution goes well. Basically, it's not really going. So it's reaching 30 billion of revenue by 2050. I think that's reasonable. 30% free cash flow margin should be around 32. So you get a fair value of 22 here. No, let's change the free cash flow to 32. This would be like more optimistic right now, but as you can see, I would say the bear case would be around 18. So yeah, 23. We change that 26%. That's 25. Yeah. So I can show you actually a video on some numbers for UiPath, but not really. Just its thing is a lot of companies need automation in their processes. So you can see here, its valuation has skyrocketed. Right now, I think it's around actually 3 billion, which is closer to the 2018 valuation. It should be around 4 billion, but yeah. So they get 6 new customers, enterprise customers every day, which is impressive. This probably would be, yeah. This is from 2018 actually, so they'd probably get way less right now. like probably like one or less today, but yeah. Actually, no, because so another thing with UiPath is basically that it also has a UiPath Academy, and you go to its YouTube channel. It's just it actually has a lot of videos for about automation and basically like UiPath Essentials training uh automating complex Excel processes. It's a good way to build a solid community, and a solid community is more than anything. So that's just some yeah, yeah, one of the fastest growing software companies ever. Right now it has slowed down significantly, but yeah, uh, that's just a short thing. Uh, goes, yeah, it's slowed down 46, now 26, 25, yeah. So there is a lot of people. It's it's basically losing almost half the money that of its revenue right now, which is a pretty bad thing going into uncertain macro time. They could weather it certainly with 1.7 billion in cash, and also looking at their free cash flow, 130 million is still bad, but it's not as bad as 400 million. I will just say you should, in my opinion, you should start dollar cost averaging it, buying some, starting to buy some shares of UiPath. It's a great company. It's got a long runway for growth, but you do have to be reasonably cautious because its valuation out of Ford PS5 it's not outrageous, but it is still more than double the S&P. So, well, its growth is more than double the S&P too, and its margins. It's just a great company. But yeah, it also dilutes shares at around 4 or 5% a year. So that is also something to look out for. Also, I did mention before Microsoft is a competitor. Microsoft is really looking to expand into AI spaces, and robot process automation is one of them. So like yeah, so UiPath puts its total addressable market at 93 billion. And considering they have a 54% market share, uh, that's just in robotic process automation. This one includes a lot of different types of. It includes BPM too, and it includes a lot. But basically, UiPath, even with even if you consider the AI market is like, even if you say it's not going to grow, which that's outrageous, but still at 2050, revenues of 32 billion are not they're not unreasonable, and they're actually pretty reasonable. So yeah, extending market leadership. Uh, so basically, yeah, you can just read some of these. Some customers that use UiPath actually, I think half of the Fortune 1000 use UiPath. One sec, let me just. Oh, all right. Anyways, so if you exclude them, basically just taking away Russia from their business, their net dollar retention rate is 135%. So basically, some major headwinds to their growth right now is the U.S. dollar being really strong, and the U.S. dollar being strong, Russia, Ukraine, with because they stopped operations in Russia and Belarus, and also the macro environment causing people enterprises to be way more cautious with their spending. Basically, so if you go on a constant currency basis, I think their growth rate should be it should say in this. Uh, so it mentions FX headwinds. macro volatility. Let me on a constant currency basis. Oh, that's strange. They don't actually mention that. But yeah, most companies do mention it nowadays. But so 1 billion in ARR, which is annualized recurring revenue. 55% CAGR. Uh, that's from quarter four 2020 to second quarter 2023. They're Yeah. Here it is. So yeah, the revenue growth excluding foreign exchange is actually 35%, which is a sizable increase over 24%. Uh, they spend the most right now on sales and marketing, uh, which is I think justified and the right strategy. Yeah, gaining market share or even just maintaining market share is vital, considering that their industry is growing at a 30 to 40% pace. Just, yeah. So their R&D also is important to their guidance right now. Would be a 22% year-over-year growth for for the full year actually, 22 22%. Actually, let me just change that real quick. Let's see what I'll get. I'll show you a final fair value using using some realistic assumptions here. So 22, 22. Also, I just want to mention that I am using the discount rate at 13%, so that could skew results in some way, as 13% would imply a 9.5% equity risk premium, and that is really high. Again, with UiPath, you never really know. Alright, so 21. Current price $12. That's alright. That's it for today. Thanks for watching. This is Maximal Profits.